Capitalism made in Japan. Andrew has been involved in Japanese capital markets and in Japan for the last 30 years. I think many of you here in the room have done exactly the same thing. And, we wanted to sort of revisit, what is the narrative and what's the reality of Japan? People talk about lost decades. People talk about lost generations. Well, actually, for the last 31 years, every year, Japan has been the world's largest creditor country. So how lost is that? It's the richest place on earth. In addition, when you look at the actual performance and what goes on within Japanese corporations, within Japanese capital markets, sure, there's high short-term volatility, but when you look underneath it, you actually do have some very, very impressive performance. One big highlight, many of you are familiar with the reforms in corporate governance and capital stewardship, that were introduced about 8-9 years ago. At the time, the return on equity was around 4%. The target was set at a return on equity of 8%. And Lord and behold, here we are today with an ROE of 8%. Well achieved. But to really go into this, Andrew, I want to pass the floor to you, a practitioner in Japanese capital markets, for some observations that you have on capitalism made in Japan.
Unlike the guys on my right and left, I am not as good on my feet, so I'm going to have to speak for some notes, and I've also brought some props, which we'll talk about later. I've got a box of Pokies, sheer happiness, and a 1981 Time magazine that some of you may be familiar with, How Japan Does It, the world's toughest competitor. And I think where I'm going to start and end is that the narrative that we hear is not always a complete story. And the perspective I have, I think, is a little bit different because I've been involved in some of these transactions over time, many of them by accident. But I want to join Jesper in thanking everyone here and also those who are with us online. I just got a text from my daughter who is sitting in the International House in Chicago where 46 people have registered as of right now. And over half of those are Japanese Ministry of Finance or METI students who are there at the Harris School of Public Policy. And that is the sort of exchange that Theory and I talk about a lot that is so important. I think when we talk about ROE, we talk about these objectives. What we sometimes miss is the importance of the personal relationships that allow us to have these transactions. And that's really what motivates me. Mr. Fukushima is sitting at this table here, and he was my first boss in Japan when I came in 1992 on an educational exchange from Princeton in Asia. He is the founder of the Uchimura Kanzo Foundation and has dedicated his life to developing U.S.-Japanese relationships, something that is not so easy for someone whose first American encounter was with a B-29 when he was running with a pitchfork in Kyushu. His father was in charge of evacuating Japanese troops from Guadalcanal, and yet he has spent his entire life working on the sort of relationships that I think the International House was created to start. And now I'm going to go to my prepared remarks because, if you go to the International House in New York, on the facade, there is a slogan, and it says that brotherhood may prevail. And that quote that's engaged on that's engraved on that facade is a spirit that motivated people like Fukushima-san and like George Marshall, the founder of one of the first chairs of the International House. And it's what motivates all of us on this stage. We're going to focus today on the financial markets, but I think all of us in this room know that there's a lot more at stake than stock prices as we look at the relationship between Japan and the U.S. and indeed the rest of the world. To put my cards on the table, I'm concerned that the narrow financial market narrative that judges Japan solely in terms of lost decades based on stock prices is not only incorrect, but pernicious. Pernicious because it stands in the way of the sort of mutual respect and friendship required for brother and sisterhood to prevail. It's also dangerous. Dangerous because the apathy bordering on contempt that I see that characterizes the attitude of many elite financial circles today plays into the hands of Putin and Xi, who argue, and this is Putin a few months ago, he says, the USA actually continues to occupy Japan, Germany, the Republic of Korea, and other countries, which they cynically refer to as their equals and allies. They brazenly divide the world into their vassals and all the rest. I think Putin's wrong. I think that Japan has as much to offer the U.S. as the U.S. has to offer Japan. And I think that Japanese managements in 2023 do a better job for shareholders like me than either the average U.S. company or the average Chinese management. I think that replacing the real engineers who have restructured Hitachi, Sony, Okuma, and Toyota with the financial engineers who have ruined Boeing, GE, Intel until very recently, and Toyota with those financial engineers would be a colossal mistake. In particular, I'm deeply skeptical that the big-name U.S. private equity firms have anything to teach most Japanese managements. Quite the contrary. And this is a position that's shared by none other than GE's current CEO, Larry Culp, whose restructuring plan relies almost exclusively, in his own words, on masters from Japan. I think the best place to see the promise of a more equal U.S.-Japan relationship is not in Silicon Valley or Wall Street, but in places like my new hometown of Nashville, Tennessee, where over 200 Japanese companies, including Nissan, Bridgestone, and Mitsubishi, have moved their headquarters. Or in Omaha, Nebraska, where Warren Buffett's views of Japan have moved, not for the first time, in opposition to the consensus. I think the best metaphor for Japan is not based on lost decades, but on Shohei Ohtani, a Japanese baseball player who has raised an American game to new levels, not by changing the rules, but by playing better according to the same rules. If we can change the narrative, then I think we win in three ways. Japan wins by earning the respect it deserves. The U.S. wins by reversing the manufacturing decline of the past decades with the help of Japanese expertise. And even China wins by seeing that it's possible to trade with the U.S. on mutually agreeable terms without devolving into armed conflict. Now, I don't deny the facts that support the narrative that so many in the press have reported, from Leo's recent piece entitled "Can Japan Feed Itself?" to William Pesick's book, Japanization, What the World Can Learn from Japan's Lost Decades, to the recent BBC News piece, which I'm sure many of you read, entitled "Japan Was the Future, Now It's Stuck in the Past." I simply note that there's a bigger picture, just as there was a bigger picture in 1984 when Harvard professor Edgar Vogel wrote that Japan was number one, or, and now I get to use my first prop, when Time's cover called Japan the world's toughest competitor. And this is a hilarious magazine. Up in the corner, it says Hollywood, dead or alive. It's really funny. And there's an article in here about how U.S. public transportation is in trouble. And this was in 1981. Some things never change. So my contribution to this shared inquiry is 30 years of disinterested participation in Japanese financial markets from a variety of angles. Employee of a Japanese company, thanks to Mr. Fukushima. Investment banker in China, Japan, and Silicon Valley, thanks to Tad Bizak, who many of you know is a president involved with the Hong Kong Society. And as an investor and sometime activist in in Japan and many other markets. Now, I could quote statistics and show charts to support my case. I could talk about the 1 million manufacturing jobs that Japanese companies have brought to the United States in the last few years, even as U.S. companies have shut down thousands of factories, sacrificing skills and resilience on the altar of efficiency. I could show tables that illustrate Japan's leadership in the things that suddenly matter now, from industrial automation to precision manufacturing to nuclear power to cool fashion, food, and travel. I could list the other over 140 positive capital allocation surprises that my colleague Yohei Yamada and I have tracked in our portfolio just since March of 2020. And note that even one of these things would have been front page news when I was fighting the first round of activist battles in the early 2000s. I could talk about these micro actions are reflected in macro numbers that show Japan setting records for profits and returns on and of capital while generating higher quality earnings than most international peers. but those charts would be boring unless they came from Jesper, because your charts are amazing. And based on my experience, almost completely ineffective. Instead, I'm going to tell a brief story about my favorite Japanese snack, the poke, share happiness. I love that on the back. And give a quote from Warren Buffett on Japan, and then head into dialogue with the rest of you and the experts on the stage. In 2005, my old firm was the largest shareholder in Ezaki Glico, the maker of poke, but also of money-losing sausage snacks. An activist named Steel Partners, who many of you may have heard of, had a plan to fix the company and offered to buy our shares. Steel and its fellow activists ended up leaving Japan in frustration after a series of high-profile transactions failed, many of which I saw from the inside as a major shareholder in everything from Nippon Broadcasting to Olympus to Nippon Koa to Tokyo Style to Nissan Renault, and the list goes on and on. The narrative solidified that Japanese managements didn't care about shareholders, and yet my experience was very different. Fast forward 15 years to 2020, and I took another look at Ezaki Glico's financial statements after the stock price fell for some reason I don't remember anymore. I was delighted to see that management had implemented everything in the Steel plan without any outside pressure. The money-losing sausage business had been sold. Margins, returns, and dividends had tripled. They proceeded to buy back shares, bring in outside tech-savvy management, and invest in international expansion that has brought those pokies to Costco's in Tennessee. These actions were not unusual in the food industry. Calbee, maker of my favorite salty snacks, Jaggery and Harvest Snaps, I don't know if you're familiar with those in Japan, but they're everywhere in the US, and they're delicious. They blazed this trail 10 years earlier when the founding family brought in senior management from J&J, merged with Pepsi's Frito-Lay division, invited Pepsi's executives to join the board, raised margins, and invested in overseas production that I, as a shareholder, opposed at the time, wrongly. In the process, Calbee went from a private company to a public company, restructuring in the public market in ways we are told can only happen with private equity. Similar things happened at companies as diverse as Kao, Daiichi Kosho, Sony, Hitachi, Nintendo, and too many others to count. And yet the narrative that Japanese managers don't get it has persisted. Allocations to plain old Japanese equities, and by that I mean just trusting management to do the right thing, not trying to change management through activism, not trying to change control through private equity. Those, as Jesper knows, those allocations outside of Japan have never been lower. Which brings me to Warren Buffett and to my first question for the audience. Buffett famously said in 1998 the following about Japan, and this is actually at a talk hosted by my boss 4 months after I'd been hired to work in Japan. So I was lucky he didn't fire me after he said this, after Buffett, his hero, said this. Here's Buffett. I find very few wonderful businesses in Japan at present. This was true even when the Japanese economy was booming. It's amazing. They had an incredible market without incredible companies. But here's what he wrote me in 2021 in an email that I'm sharing with his permission after I asked his opinion on the common narrative about Japanese companies. And bear in mind that in 2009, Mr. Buffett had purchased Tungaloy, a Hitachi subsidiary that has been a fantastic addition to his company. But this email that he wrote me was after he purchased stakes in several large trading companies. Our investing approach in Japan is to be completely passive, but to respond to any ideas initiated by the 5 companies in which we've invested. They've all reached out, and my guess is that over the years, something will materialize. We want it clear that we are investors only and have not committed our funds to Japan with the idea of telling their government, their investors, their people, or the CEOs of our investees what to do. I hope over time to build trust and a solid relationship so that when a Japanese company, particularly one of our 5, is looking to do something and is open to an investor from outside Japan, they think of Berkshire. We are committed to the 5 companies for the long haul and are pleased with the personal relationships that have developed. My question for the panel and for the audience, how do we reconcile the BBC's take that Japan is stuck in the past with Buffett's rosy view of the future? How can we develop the sorts of relationships that have formed the foundations of everyone's career in this room when the narrative that comes out from our lead institutions is that Japanese managers don't get it and need to be replaced by financial engineers from the U.S. Those are questions that I ask myself. I've had different answers over my career. I've learned a lot from both of these guys to my right and left, and I look forward to learning from you as well.
Thank you very much for this, passionate. It's not a plea, but for this, passionate call for action and call for reconsideration. Leo, if I could ask you to sort of, rebuttal, respond, your reactions.
I'm certainly not going to sit here and be a great critic of Japanese companies. I think there are some very fine ones indeed. You mentioned Guriko, and my experience with them is that I went to see them introducing me to a pair of robotic jaws with which they were working out how exactly old people crunch food. And because as they get older, their jaws are less strong, they had to adjust the recipe of the bisco, which is the other product, so that they would be less crunchy on old jaws. And so, there is no doubt at all that Japanese companies are innovating in an area where the rest of the world will follow. I've never been in any doubt about that. I think that the narrative around, since you mentioned it, the narrative around Warren Buffett's entry to Japan is an interesting one, and it's a nuanced one. I don't think it's as straightforward as it's been presented. I think that he wanted, first of all, he didn't commit that much of his own money to it. He raised a lot of debt very cheaply here to buy those five stocks and those positions. I think that as a man who makes a lot of deals, he is somebody that wanted to be with the largest deal-making companies in Japan. That's what those trading houses are. And if you want to get a look in at the ground floor on deals that they're likely to be making around the world, then those are the ones. You're not buying Japan. You're buying Japan's view of the rest of the world and the acquisitions it may or may not be making as it defends, for example, its energy position and other forms of resource security. So I don't think he was buying Japan. And I noticed that my colleague at Bloomberg is here, and I look forward to some robust discussions on that with him, because there are a couple of areas where we strongly disagree. But so I don't take that as a kind of great vote of confidence in Japan, although others have done. The reason I don't do that is because I think that a man in his 80s taking a view on the future of Japan, whilst absolutely valid, and who would possibly argue with a man of such obvious achievements and success. The fact is that I think that Japan looks very different from the point of view of a 20-year-old or a 25-year-old. And again, who am I to talk about what they are? Well, we do talk to a lot of 20 and 25-year-old, 30-year-olds about what Japan looks like. And I think that the problem is that Japanese capitalism, which I don't disagree with your thesis at all, that the emergence of a kind of a sort of tier of people that are going to come in and teach Japan how to do it better, teach Japan what it's doing wrong. It's not right. It's not appropriate, and a lot of times it hasn't really worked that well. But I would say that there are far too many listed companies in Japan. I think that Japan has allowed itself a version of capitalism which is prone to a kind of flabbiness that doesn't, in the end, serve everyone as well as it would like to imagine that it does. And I say that because I think that the obligation to innovation is being suppressed currently by the sheer number of listed companies, and I think that with that number comes an almost inevitable misallocation of capital, however great that pool of capital may be. I think that where to start. There are more listed funeral operators in Japan than there are food makers listed in the UK, for what that's worth. Now, that does give an investor an amazing choice of what to play. If you come up with a theme of any type in Japan, anything you say, I think it's all about second-hand books. I think it's all about this. There is a listed company that you can play that hunch with. The problem is that the sheer volume of listed companies means that there's no particular reason to believe that your hunch is going to be rewarded by market performance. And I think that that whilst you're absolutely right, and I totally agree, that the narrow assessment of Japan's worth as a capitalist economy shouldn't be measured by the narrowness of that set of metrics, that sort of market metrics. The reality is that it does tell you something about where faith lies in the innovation and the practicalities of whatever narrative it is that you've chosen to play. And I think that the way that some activism has been operating in Japan has been, as it were, as an offset to this gravitational pull that is created by the sheer mass of listed companies. The reason that I pick on that and have done so, in the past, is that I think that those companies have been listed on a set of wrong pretexts, and so, for example, what we're told is that young graduates are attracted to listed companies over non-listed companies. That's the way to secure the best people in Japan is to be listed. And the reason that has a sort of validity to it is because those listed companies are given preferable treatment by the banks, and the banks give them preferential treatment because they're not very good at working out, what the creditworthiness of a non-listed company is versus a listed company, and so on and so on. Right? We all know the mechanisms that are holding those things in place. And the fact is that why is it that none of those graduates actually buy the stock in the company that they have joined? Why is it that by the time they leave the company and retire from those companies, they're not actually exposed to these companies that we're supposed to believe have nurtured them from their sort of graduate egg to the end of their career and so on? And the fact is that there is a broken faith in the markets and their ability to sort of deliver the kind of rewards that they do elsewhere. And this makes me sound, I appreciate this makes me sound more rabidly kind of market capitalist than I really am. But when you can see, but when you see, when you see, a system in place which is pretending to do one thing but actually delivering something else, I think that is an issue, and I think that a lot fewer listed companies would do a very I think it would do a lot to streamline the way in which we think about how innovation should be how it should be applied and should be performed within the corporate context.
It's very interesting, just to give a couple of data points and a little bit of personal insights into this. When I came to Japan 38 years ago, one of my mentors told me, METI is not about picking winners, it's about protecting losers. And it's quite interesting because, when you look at corporate Japan today, there is no question that there is an incredible experiment in financial socialism that is going on. I mean, if you look at the data, I think Teikoku Data Bank, does a very thorough job on this. You find that basically around 13% of all of Japan's companies have not been able to cover their interest expense out of current profit for the last 5 years. Now, given that interest expense, given that rates are that low, close to zero, I mean, that's a pretty good definition of zombie companies that you actually have. And so the problem, when you actually analyze, Japan, the problem is not a dearth of startups. There's plenty of entrepreneurship that's going on, but the problem is actually haigyo. it's that there is no exit. Companies are protected from exiting. As a result of that, they are price destroyers because they have no concern over the cost of capital that needs to happen. They tie up resources that could otherwise be freed up. That's a very, very big problem, that you actually have. But, so I think ironically, you're both right in the sense of that there is a lot of innovation. And, just to give you another data point, right? Again, when we arrived in Japan and working at the great house of S.G. Warburg's at the peak of the bubble, Japan had no earnings. The earnings per share in the listed market was around 40 yen, but the price earnings multiple was around 70 times. Right? Now you see that the EPS has gone from 40 to basically 230, so almost 6 times increase, and the price earnings multiple has basically collapsed by about 6 times. So it's just this overhype that Japan had during the bubble economy, which now has been priced out, and Japan actually today is in a position where it's actually normal for all intents and purposes from a global comparison. And I think, this is where it gets interesting, because if you do get global recognition, as well as most importantly, Japanese recognition, right? I have the joy in my day job, once a month, I have to speak in front of 3,000 Japanese retail investors with the Monex Group, right? This is retail investors in Japan. And they always ask, they're wonderful. They're because they're, unlike, institutional investors, they don't ask complicated questions. They ask very simple questions, right? And they ask, what is it going to take for the Japanese market to go up? And my answer is, you guys buying. Because the reality is that, if you look at domestic institutional investors, as well as domestic retail investors, over the last 30 years, they've said, no, thank you. We prefer to buy the United States of America. We prefer to buy, no, they didn't buy German companies, so they prefer to go into overseas rather than outside. And the interesting thing is now, whether given the geostrategic, the geopolitical changes that have been going on, plus greater stability that we have here in Japan, whether that's flow, that preference for the world rather than your own assets, if that starts to actually revert, then, I think the virtuous cycle, could start to be coming through.
I'll respond to one comment you made on Buffett, just because I do have a little bit of insight. And I have on my wall an email that he sent me, and it said, Andrew, remember, when you get to heaven, the first question St. Peter's going to ask you is, did you find a Japanese company for Berkshire to buy? He is absolutely committed, and I want to. This is an advertisement for Berkshire Hathaway. And for German companies as well. He's got $100 billion in cash. He wants more Japanese companies. I can go into a lot of detail with that. And does he look at things differently from a 20-year-old? Perhaps, but I think one thing that I've noticed, and Jonathan Alum, who we talked about earlier, who was a great writer about Japan, he's commented on this as well, is that the most pessimistic people about Japan tend to be the most knowledgeable people about Japan. And if you step outside, and the question is always compared to what? And so I would, of course, agree with you on a lot of things that you said. I've had crazy experiences in companies like Koll with their robotic bra testing and all of these things that are quirky only in Japan. But I've also been looking at, I started my career in Hong Kong, and I spent a lot of time in Silicon Valley. And as you sit here in Japan, it sometimes feels like the pace of change is so slow. But when you look at what's happened to corporate governance, for example, in the United States, and you look at how share buybacks have morphed from something that was a return of capital for shareholders to something that is just blatantly a way for executives to reward themselves. And if you look at the skill sets at the top of U.S. companies, you will see that in almost every case, it is considered both necessary and sufficient to have an econ degree from an elite university and an MBA, but no engineering. And you compare that to Hitachi's board, for example, which is Sir George Buckley, Cynthia Carroll. Buckley is from 3M, and he is famously anti-GE. Cynthia Carroll was from Anglo America, where it was absolutely critical for Hitachi to extract itself from its South African situation there. The changes in these Japanese companies have been extraordinary and almost all positive. While the changes, for me, as a disinterested investor, I could care less about whether I'm 100% in Japan or not. I mean, I'm like another crazy Tennessean, John Templeton, who was 75% cash in Japanese equities in 1974 and out by 1979. Completely indifferent. But as I sit and I look at the U.S. companies, they're run by people who don't understand the business and do understand finance. And I look at Japanese companies, and they are run by people who have had to recover from the disastrous decisions made by their bosses. Mitsubishi Estate's a great example. And they almost went bankrupt after they bought the Rockefeller Center. Today, they are selling buildings at high prices around the world and buying back their own shares at a discount to NAV, and will tell you exactly why they're doing that. Meanwhile, in the U.S., we have WeWork, where Jamie Dimon, our collective boss, is a personal banker to Adam Neumann. It's just unbelievable how much that has changed. And yet, your criticisms I will accept of Japan, but I think on a relative basis, as this is what I always deal with investors, I'll talk to companies, allocators who have literally zero in Japan, and they're comfortable everywhere else in the world.
So, sorry, if it was read as a criticism that wasn't intended as such, what I just think is the observation about the cash piles in Japan is not that they are something to be criticised, but they are them to be observed as symptoms of something. I mean, given that the subject is capitalism, they are symptoms of an attitude towards the capitalism available here that tells you that there is a broken faith in certain parts of certain very key parts of the financial mechanisms that are going on, right? Whatever the rainy day that Konosuke Matsushita was referring to with the banks, right? That they lend you money when it's dry. They lend you an umbrella when it's dry. They take it away when it starts raining, right? I mean, that's when one of the greatest industrialists of Japan saying that, and the point is that that many years ago, it was observable fact that the Japanese banks were not performing the function that businesses needed, and in many cases they were providing unwanted services that have got a lot of companies into a lot of trouble. And the fact is that I've spent a lot of time wondering and asking about why these cash piles exist in Japanese companies, and not because I believe that the money should all be returned, via share buybacks or anything. I don't share that view with the investors who've argued most strongly for that to take place. But I do find it fascinating that the rainy day, for example, that we just had with a global pandemic, right? The rainy day, that wasn't the rainy day they were saving for. It's not even coincidentally that they're saving for a day when there's a cost of money, a true cost of money. That isn't what they're saving for either. They're saving essentially because they never want to be beholden to the banks again, right? And I think that is probably the most consistent truth. I mean, if you look as well, cash, percentage of net cash companies gets bigger the smaller, the further down the stock exchange you go. The Topix Small Index has 56% companies that are net cash. Topix, the Core 30, is something like 25, right? So the smaller you get, the more worried you are about being beholden to the banks. And it seems to me that whatever the motivations around that, and whatever the strength that it ultimately gives these companies, the cushion that it gives them in tough times, all of which puts them at a theoretically great advantage to the competitors around the world. It's being done for reasons that I think belie a kind of lack of faith in the way that the banks operate, and therefore the sort of core of Japanese capitalism operates.
No, and this is a key point. And there, we've just had, Prime Minister Kishida announcing who the new Bank of Japan team is, and the deputy governor, Mr. Himino, just last October made a proposal, right, that banks should start to lend on growth rather than on real estate collateral. I mean, wow, what a revolutionary concept. So, I mean, this is to Leo's point. I think that if there is something that's broken, it's not the engineers in the corporate sector, whether it's the industrial sector, even in the service sector, right? But, the financial allocation and the availability of credit and credit priced fairly, right? And credit priced correctly on cash flow rather than on real estate collateral. That's something that, Terry and I, we discussed this 10 years ago, 20 years ago, 30 years ago, and really very, very little has changed there.
Narrative follows price, not the other way around. I mean, that's axiomatic. It's true in sports. You don't read about Shohei Ohtani and how great he is when he's 12. You read about him after he's the MVP. And of course, the job of those of us who are at the point of the spear looking at individual companies is to say, yes, all those things are true. But it's also true that when I got off the plane, Yohei sent me an email, and 3 of our companies, all of which were net cash, had just announced aggressive share buybacks. This is something, so on the margin, these things are changing. When I first started the firm I run today, Cal, was a net cash company. Today, it's appropriately levered, I would say. Daiichi Kosho, which was one of 13 companies that made karaoke machines back in the 90s, is now one of only 2. They have returned all of their excess cash in a variety of dividends and buybacks. And so, as an investor, that you want to find out where there's a disconnect between the narrative and specific individuals. Not saying that those broad statistics are not true, but the rate of change that we observe on the ground is accelerating in our direction. And then, and back to your rainy day point, I think it's a great one. I remember sitting in March of 2020 and looking at our portfolio, and we created a new metric, number of days you could last without revenues, because that was real. For our portfolio, it was 238 days. We had that much net cash. We didn't have to have any revenues. We could just draw down. And that is, I would submit, a very rainy day fund. That's of biblical proportions. And I looked around in the U.S. for any companies that had a similar position, and the number was 0. And then I, with Yohei's help, I did a little historical data mining, and I found some companies that used to be that way, and one of them was Intel. And Intel at that time had just stopped buying back shares because it was incredibly levered. The CEO of Intel at that time was a financial engineer from General Electric, of course. They had lost their technical leadership in manufacturing, and they were financially hamstrung. They could no longer invest. But Les Vadez, who's a 4th employee of Intel and who happened to be my neighbor at that time in Sonoma, California, he had been the engineer who built the first semiconductor. Gordon Moore was a chemist, but Les was a Hungarian refugee who was the actual technical guy who built the semiconductor. He also was the head of Intel Capital during the 90s. And I noticed that when he and Gordon Moore and Andy Grove ran Intel, guess what? They had 238 days of capital as well. They ran the company that way. And I asked them specifically, I said, how do you rationalize this? Here's Intel today, their balance sheet, net debt, can't do anything, and here are all these Japanese companies. And his response was, it is intuitively obvious to me that a company that has this capital on hand is going to be the master of its own destiny. And he said, when we ran the company, Andy Grove, Gordon Moore, and I never had any debt. That's how I lived my personal life. And bear in mind, fabs cost billions of dollars. We did not want to be on the hook for, for bankers' desires when we needed to do stuff. So I'm not saying that you're wrong, but I am saying that there was a time when the best-run U.S. companies had balance sheets that looked a lot like these Japanese companies. And as Les told me, he said, balance sheet was never our problem. It was growth that was our problem, and being prepared to invest ahead of that cycle. And that is the behavior that we've seen. If you look at the activity of Hitachi, for example, I keep using them, but they're buying and selling assets. They're returning capital. They announced their first buyback in 10 years on the same day last year, July, that Jamie Dimon announced that J.P. Morgan could no longer afford buybacks because they spent all their money at the top. So I think there's a balance. I think there's a lot of change within this vast number of Japanese companies. And to me, that's intrinsically worth exploring. But at the meta level, if you look at your endowments, if you go to a fancy Ivy League school like I did, and you ask them what their allocation to Japan is, invariably it's close to zero. That's just where they are right now. And invariably, they've got a lot in China, they've got a lot in private equity, they've got a lot in venture capital. And I think there's an enormous amount of opportunity for Japanese venture capital. There's an enormous amount of opportunity for plain old Japanese management. And that's a good thing, and that should be part of the narrative as well as the bad. And now I've talked way too much. We should get some questions from other people.
No, absolutely. And I just want to share, two anecdotes. The first one was I was involved when one of the American big activists, put pressure on Fanuc. And, we had done the analysis and basically found that Fanuc is the best company in the world because their operating margins, on average is around 50%. And in the worst of the worst times, during the global financial crisis, the operating margin goes down to 25%. Oh my God, right? But of course, they had a very heavy balance sheet. You had a legacy charismatic founder who, basically ran the company like a cult. And he somehow said, we need 1 trillion yen of cash on the balance sheet to protect ourselves against a rainy day. And the pitch that we made was very simple. It said, you're the best company in the world. But your capital allocation, you don't even show. You're in the bottom 10% in the world. Why can't you do a win-win and also get into the top 10%, on the capital side? And, it actually worked, right? I mean, they did do all the right things. So I think that the openness of management is very important. And, you're aware that over the last couple of weeks, there has been a big engagement, in one of the big printing companies here in Japan. And, through my current employer, we were involved with the CEOs and the management team here of that printing company. And basically, you may have seen last week, in terms of presenting the next mid-year plan, they basically delivered on everything that, was demanded. So there is now that the crisis is over, and this is something that's very important. This is why I'm very strongly in your camp. This country, the corporate sector, the listed company, has seen no sales growth for the last 20 years. Top line growth has been flat, yet corporate profits have trebled. You show me an operator who can deliver that. And despite that, the unemployment rate never went above 3%. So you talk about a multi-stakeholder system of capitalism. I know that wages haven't grown. I know that there's been costs that have been paid, but wow, if you want me to invest in a company, right, where I know my grandchildren, I don't have any, I hope not. I should ask Kathy. Sorry. I will pick a Japanese company at any point, right, over an American company. But if I need to make money between now and Christmas, I will always pick an American company. Now, having said this, questions from the audience. Please don't be shy. Tony.
In the interest of full disclosure, yes, Andrew and I were neighbors, and we were actually co-investors in one of the companies, Olympus, that didn't do so great, but eventually survived. I'm Tony Miller for PAG, from PAG, for those of you who don't know me, and PAG is in private equity, but we're also in markets, credits and markets, and we lend money and we invest in public companies in Japan. Subtly, perhaps one could observe that Andrew and Leo are arguing for capitalism, although with different viewpoints, and Jesper would never admit it, but was arguing for socialism. Yeah, right. And that, in fact, the big success of Japan over the last 20 years that we've lived here and watched it has been that in spite of the fact that the economy hasn't grown, there's been remarkably little unemployment and remarkably little social distress, having the type of economy and low growth and low wage growth that Japan has had in China or the United States would have thrown the government out long ago. And I understand Jesper's affection for the fact that there's been corporate growth, corporate profit growth, and very low unemployment. But there's also been no wage growth, and and the huge piles of cash don't necessarily have to go back to the shareholders. The point of that cash in most companies that are well run, not the greedy sons of bitches in America who are doing cash buybacks to increase their own stock option value, but well-run companies reinvest that cash either in R&D or in capital goods for expansion. That hasn't happened in Japan, and that's, in my view, the reason for the low growth. How do you fix that? They're not holding it for, they're holding it for a rainy day because they're cowards. They don't want to, I'm not telling them be a financial engineer and give it back to the shareholders. You know, buy some stuff with it.
May I respond to that first? And I really should let Yohei respond to this, because one of the things that's interesting is over the last 12 years or so, when we first, our portfolio was doing the things you're talking about, Tony. They were conserving cash, and this is after the GFC. So they're coming out, and basically no one's going to invest in anything. And we're going to conserve cash and focus on raising margins. What we've seen in the last 5 or 6 years across the portfolio, and I'll just give Okuma, help me, Yohei, Morinaga, Hoagie, those are just 3 that spring to mind. These are companies that are taking 50 years of old plants and equipment and replacing them, and it's going across the board, whether it's food and beverage, industrial automation, you name it. And the reason is really driven by the labor shortage, because they can no longer afford to have manual processes. So we're seeing an enormous, Takeuchi is another example, an enormous amount of investment in productivity. And we've had to, as a value investor who likes to just see cash coupons coming at me, I've had to relax a little bit and say we're spending more than depreciation, but the return on that is very high. In particular, the return on their overseas investments. You know, Japan has been the largest investor in the U.S. for the last 3 years. There's a $2.5 billion plant that was built by Toyota and Mazda in Huntsville, Alabama, just opened a few weeks ago. You may not see it here, but it is a very big deal in the financial statements of most of the companies we look at. Now, I don't know, Jesper, if you see that in your macroeconomic analysis, but Yohei and I see it bottoms up, and I would say it's coming, would be my answer.
I think I don't agree with the coward comment. You're ascribing, in the greed and fear balance, you're ascribing far too much to fear and not enough to greed, or in this case, the absence of greed. And I think it goes back to what I hope I was communicating at the beginning, which is that I think the incentive structures in Japan are not actually delivering the kind of capital allocation that you would want. I mean, what you're talking about is capital allocation. Whether how much goes to shareholders and how much goes to paying staff and so on. Those are, as it were, those are the technical elements of this. The fundamentals that you touch on is capital misallocation. And I just think that the experience is that the incentives are wrong because there isn't enough to promote the kind of greed that would generate the sort of allocation that you're talking about. I don't think it's cowardice. I think that there is a set of incentives with which senior management of Japanese companies are faced that mitigate towards them doing nothing rather than something. The risks of doing something in the 3 years that you're CEO or the 4 years that you're CEO so far outweigh the benefits to you. And the reason for that is as you know, that the share price is not part of their lives. It's neither a defense against takeover, as it would be elsewhere. It's not a piece of paper that you can use to acquire other business, because if you're going to buy something in Japan, you do it with cash. And it's not your pension. Actually, it's not your salary. And I think that the incentive structures, you may argue, and you may be very right to do so, that the incentives in the US, for example, are skewed too far the other way. But to have them not skewed at all that way, as is so often the case in Japan, and it could go on and on, but I'm not going to. But you, as I would imagine in private equity, you're encountering, in many cases, companies where there's a large founder stake, because I would imagine that's the most exciting bit to you, because that's most likely to change hands, and with it the kind of corporate control. But for the majority of companies, the management doesn't hold that stake and it's not interested, right?
So it's very interesting, Tony, on that, 2 points, right? Number one, if you actually look at, why have wages stagnated, right? A lot of it is just demographic role. Because whether we like it or not, your annual income peaks somewhere between 55 and 58. And then you roll down. In the Japanese case, you get from a big company, you get put into a venerable position at a subsidiary, which means 30% less pay. And then 5 years later, you go into retirement, which means another 30% less pay. And the fact that the baby boom generation rolled down over the last 20 years on that curve explains about 70% of the stagnation in wages. For the young generation, right? What is true that there were massive changes in labor contracts with, since 96, part-time and contract employment allowed in all industries. And as a result of that, corporations, yes, did underinvest in their human capital in the sense of that they used contract labor rather than full-time employees. But you find that actually over the last 4 years, this has started to change, right? That now full-time employment is the jobs that are being created. So the quality of employment is actually coming through. The other point, if you look at, and Robbie, you're the expert on this, if you look at research and development spending, right, which is a bit of a murky number, right? But if you look at listed companies, for example, their investment in R&D has continued along the way. The problem is the translation of research and development into commercially viable enterprises, where America is excellent at, for example, socializing the risks and privatizing the profit, right? I mean, Moderna, just as an example, and I'm grateful for the COVID vaccine that was developed there, but the reality that you've got 8 billionaires coming from one company where Terry's tax dollars, basically funded the research and privatized the profits. Well, you probably got along the stock, right? Sorry, no, but you get the point. This does not happen in Japan because of the way intellectual property, within companies, within university is actually managed. You cannot become filthy rich, right, by having a cool patent. That's just the nature of the game here. So there's a difference in the form of capitalism, because it is recognized that intellectual property created in a corporate enterprise or at a public university is actually part of it must be a social good. That's enshrined in the way Japan's capitalism works. As a result of that, you don't have unicorns.
Well, and I've been waving the pro-Japan flag the whole time, so I think I should get on the other side and say that I think one of the unfair issues that is also an opportunity, and if this really turns into a series, I hope we'll address it, is the inequality of language that is imposed upon Japanese students by the backwards policy of the Ministry of Education and the refusal of the Education Department to really align Japanese universities with overseas universities. It provides a kind of ceiling on, and we all know this, the Japanese English speaker always gets the job regardless of his intellectual capacity. And that's not the fault of the 99% of Japanese students who work very hard to study English, but they're not able to go out into the global market, and so therefore they can't really participate in the sort of wage gains that their intellectual prowess deserves. And we were talking last night at dinner about how a hospital just received 9 resignations from nurses who went to Australia where they had their salaries tripled. And if we're looking ahead and we look at the demographics in Japan and we look at the big opportunity for the U.S., it's for an alignment of education that starts right now with English. And I think that's how you can get some real negotiating power for the workers, because they don't have the alternative right now, and they should.
Yeah. Sorry, I'm snickering because I love it, because we could have this discussion with some elite Japanese people, and at the end everybody there's lots of disagreement, but at the end everybody agrees that the fault lies with the Ministry of Education, this is like a universal consensus, right? And that has been true for the last 30 years, and somehow nobody's been able to do anything about it. But Other questions from the audience, please. Robbie.
There are a few words that have not really come up much in our discussion today. Climate, energy, food. Well, pokies kind of count as food. Medical costs, longevity. Yes. Yeah, that's great stuff. I love them too. Longevity. And I'm wondering this. If capitalism made in Japan is to succeed, it must address these issues that are issues for everybody. When you look at Japanese companies and look at the innovation in those Japanese companies, do you see them addressing these issues? Because if they're going to be viable long-term, they have to address those issues. So what do you see in Japanese companies that would suggest that they are or are not addressing these sort of global mega themes?
Yeah, Ruby, yes, I'm sorry we did leave those out, and they are somewhat important. It is striking to me when you mentioned, particularly because food, because it happens to be something that we were looking at recently as well, but energy too, that if you treated the country of Japan as a company, it's in a far greater forms of debt and reliance on the outside world than the companies themselves. So you've got this, this rainy day sense that we were talking about with cash piles and so on. But actually, 40% food self-sufficiency, 90-something% energy self-sufficiency, and so on and so on. My sense has been, and this goes back, of course, to the trading houses, and I suppose some of the big energy companies, is that there has been a remarkable reliance upon those companies historically to be the insulation from that reality in a way, and long may they continue to provide that cushion. But it is interesting that it's been that very particular and actually looking around the world, very unique corporate structure that has played that role. It's essentially been outsourcing to the trading houses the job of having to think about all of those things. But the very short answer is that I think that they have at the same time provided a layer of complacency for companies that are not those trading houses to, right, that it's not something that you see featuring in the 5-year plans of 5-year medium-term plans, long-term plans of companies. They talk a good game on ESG and SDGs and so on and so on, but it's not an innovative as a priority that you can tell, right?
I love this, and this is part of the issue. As you are very, very well aware, Prime Minister Kishida just launched this GX initiative, right? But nobody knows about it. Right. And it is actually quite brilliant in terms of the way it is done. Right. Here you've got 150 trillion yen. Now, remember, this is a 550 trillion yen economy, 150 trillion yen to basically do public-private partnerships to manage transition investment to get towards a decarbonized economy. Right. It's so important that the Ministry of Finance, for the first time in post-war history, has actually created a new category of bonds, right? We've got Akaji Kokusai, we've got Kensetsu Kokusai, so what is it, debt finance bonds and construction bonds, and we now have GX bonds. And that's a huge commitment from the Ministry of Finance, right, to actually say, well, we're with this, and we are actually, as a national project, managing the transition, right, to get towards a decarbonized world. Yet on the global stage, nobody knows about this, right? Which is...
I want to add to that, and I think that one thing I think can all agree on is that in addition to all problems being the fault of Ministry of Education, all marketing problems are part of... Japan does a terrible job of marketing itself. I mean, I love Hitachi, but when I see their ads in the FT, my eyes roll. It's like, oh my gosh, inspire the next, and then 5 paragraphs of text. But what they don't talk about is in 2015, the CEO of Hitachi, this is after Fukushima, he says, look, the only way we're going to solve this carbon problem is by continuing to invest in nuclear energy. And lo and behold, 7 years later, Hitachi is the partner with Bill Gates in his whatever that thing is. He is also they have replaced the Chinese partner in the new project in England that is being restarted. They are the pivotal player in the GE Hitachi alliance, which Jack Welch famously sold out of. You know, GE has spent $100 billion repurchasing its own shares and divested of nuclear energy. Imagine where we would be today had any of that been put into things that really happened on the decarbonization front. Japanese companies and Japan, on a per capita basis, is the most efficient advanced nation anywhere in terms of CO2 emissions. And you look at the products, whether it's air conditionings, car, you name it, they're designed for efficiency by nature. And I think that it's just so, this idea of resilience and redundancy is so ingrained in Japanese business practices that they just don't talk about it. And I think they should. And I think it's I'm glad you brought it up, and Leo as well.
Yeah. Any other questions? I think in the global community, in cyber, no, they're actually real.
All right. This is a question for Andrew. And, you know, as Asia Society, we like to talk about the region as well as for Japan. Andrew, as an investor primarily in Japanese stocks, how do you view the U.S. government's increasingly aggressive efforts to prevent Chinese companies from gaining access to cutting-edge technology developed outside of China?
As an investor, I see it as an enormous opportunity for Japanese companies because they are a preferred supplier. They're a preferred supplier in the U.S. As recently announced, they're jointly developing with the UK and Italy a fighter jet. Japanese companies provide 37% of the most recent Boeing airframes, and that's going to continue. You know, Boeing cannot build a wing, which is fascinating, without Japanese help. It's a little bit disturbing. You know, Honda has just announced that they're going to have a new, that Honda has developed a jet more quickly than Boeing. We don't even know when Boeing will have a new jet, and it's certainly not going to happen without Japanese help. Hitachi, when it purchased the ABB power grid business, its largest competitor was the state Chinese infrastructure company. Today, there would be no possibility for a Chinese competitor to compete with Hitachi in the critical job of upgrading the grid, which I saw in California and we all see. So I think that it is a huge competitive advantage for Japan, but that doesn't mean that it's a competitive advantage for the world. I'm not encouraging these sorts of trade barriers. I think that is an unfortunate reality that all of us who started our careers, as I did in Hong Kong, hoping that this economic integration would lead to political integration, I think that's incredibly disappointing. But from a Japanese equity perspective, I think it's a huge opportunity.
Yeah, well, we'll see, right? It's ultimately the corollary of all of this is that you're going to be asking companies are going to be asking shareholders to give the okay to a whole series of non-economic decisions. And I think that while the shareholders at the moment have stayed very, very quiet about decoupling and the US and what it's doing at the moment, there's going to come a time where the shareholders are going to say to the companies, okay, the companies are going to say to the shareholders, are you okay with us giving up on the 30% growth and our biggest fastest growing market and that market where all our profits come from? Are you okay with that? And the shareholders are going to go, well, no, we're not, but they haven't been asked yet. And I think we're in a very interesting phony war at the moment where the shareholders haven't yet been asked if they're okay with what is implied by everything that's being said on all of this.
Japanese shareholders or the US?
No, I think it's both. I think it's US shareholders, and nobody's been asked yet. Are you okay with all of this? Because it's still at the moment where they don't want to put their heads above the parapet and say, yeah, no, actually, we're not okay with this, because it's politically terrible in Washington at the moment to say anything of the sort, both at a corporate level, which is why the lobbyists are so quiet, and the shareholders, which is why they've said nothing about this. But there will come a moment where they have to, because non-economic decisions are being made on behalf of something that not all of these people necessarily agree with. So we'll see. Yeah.
Just to your comment on what to do with money, and more a comment than a question. The third I would see in investing in the employees, both in salary growth and second in education, which addresses the number one on education. Definitely, it's not just the Ministry of Education, but it's also the companies that could be doing things. We do that internally, but we don't really make a difference on the big scale of Japan. But it would be what companies need to do. And the second to your question of how bad Japan is to communicate or to market itself, I think the core of that problem we're seeing playing out right now, basically with Dentsu, finally something is happening that only the very tip of the iceberg of this rather very unfortunate sitting on top of Japan, defining what marketing and communication is, which fundamentally it's not. It's a media trading house that is not addressing the issues of communicating Japan. So if Japan wants to change, it really has to basically ban, for example, for 2 years, like Hino is not allowed to sell trucks after having cheated for 20 years. They shouldn't be working for the Japanese government and doing a bad job. I think these are the things that need to change. And then Japan really would be seen in the world for what it's really worth. Thank you.
No, I mean, this maybe that's a common thing we can also agree upon about like the evils of the Ministry of Education and the evils of Dentsu. But you know, I hope there's nobody. No. Just for 30 seconds on that, you know, what is very interesting, you know, and I think several in the room were involved as well. During the Abe administration, we, you know, did a lot of lobbying for hataraki kata kaikaku, right? So change in, you know, life-work balance and all of that stuff. But, you know, really from an economist perspective, the argument was always, you know, what you really need to do is you need to get away from lifetime and, more importantly, seniority-based compensation, right? You need to move to some form of seika shugi, some form of meritocracy actually being reflected, you know, because that is, you know, one of the big reasons for why the labor market is illiquid, because you really have no reason to change companies because you're slotted in exactly the same seniority pattern if you move laterally. But if it's a meritocracy, then that opens up, you know, opportunities for women. It opens up opportunities for non-Japanese. It opened up opportunities for competent Japanese, et cetera, et cetera. And that was always, the Keidanren was always the most vocal opposition to this, right? No, our culture is, you know, seniority-based pay, blah, blah, blah. What is really interesting, and you know this very well, that now we've got, you know, one of the most unionized companies in Japan, NTT, right? Their new president, right, from the 1st of April is introducing meritocracy. This is where it gets interesting. And so I think that where this debate about learning from Japan, I mean, I love your little thing here, right? Look at this. I mean, this is, you know, how Japan does it, right? The world's toughest competitor, right? I mean, this is a great time to actually revisit this, right? And Andrew, loved your initial remarks that in terms of the shifting geostrategic priorities, you know, that Japan as, you know, a key ally in Asia Pacific, right? Fine, we're going to double our defense spending. Isn't that nice, you know, for the American defense contractors? But it goes way beyond that, right? Because to be respected, you know, amongst the People's Republic of China's leadership, right? As, you know, Kevin Rudd from the Asia Society always points out, the Chinese Communist Party is very simple. They are Leninist, and Leninists respect only one thing, which is strength. And, you know, if you have a narrative in the English language media, as well as in the Japanese media, that is dominated by lost decades and decline, you know, nobody in China is going to take you seriously. If you start to change that narrative based on facts, not fiction, we're not Elon Musk selling snake oil, sorry, or Bitcoin or whatever they sell in America, FTX, right? No, Japan is serious, and there is hard evidence to show that Japan doesn't move fast, but it moves consistently. And, you know, this consistency gets you very, very concrete results, results that you cannot argue with. Doesn't help you make a quick buck. No, it doesn't, right? But it does help you to pay for your grandchildren's pension. I want to, Terry, Oh, God, there we go.
We need to wrap up shortly, but I want to, as one of the founding members and co-chair of Asia Society Japan, thank you all for coming. Thank you, Jesper, Andrew, Leo, for a fabulous conversation. Andrew actually slipped in, if this becomes a series, we'll need to consult with Sawako because she is really in charge here. But I hope we can do that. And one of the things that I would reflect on the whole conversation is that, surveys are being done in the United States of college students, people under 30, about capitalism, and the vote is actually in favor of socialism. But if we had that vote in Japan, would people be voting against capitalism? Probably not, because the form of capitalism that we've had, different as it is, maybe fractured as it is, maybe not properly structured as it is, still has performed for society. And I think that could be an interesting basis for continuing the conversation, because I do think that and this is what Asia Society is all about, navigating shared futures. We have a big debate going on with regard to capitalism. We have a big debate going on with regard to the US and China. We have a big debate going on with regard to the geopolitical future. And so this debate, I think, is a very valuable one to have. So thank you for a fabulous morning.
Thank you, Jennifer Rogers, founding member of Asia Society and also with the Shurian as General Counsel Asia. But I sit on a few boards, including Kawasaki Heavy, who's very active with our partner Boeing in making the planes you referenced. So I think the partnerships at large Japanese companies are real and continuing. Obviously, sitting on the boards, I am a product of the corporate governance changes and the push for diversity. And I think if you look at some of the catalysts, it's been the government. It's been METI, it's been the FSA, and others realizing with the productivity numbers, of the OECD countries and Japan being the lowest, you're seeing stagnation. And you're not seeing the innovation and the speed you need. And we've talked about the fact that Japan has changed rapidly in this area. But when I think about diversity and also the fact that you've had so much of the hierarchical, related promotion, you still have, I think, a limited pool at the top of Japanese men, and diversity takes time. So I think that one of the things activism and shareholders have done is put pressure on Japanese companies, and I'd like your view on how do you think Japan is embracing diversity at the top, and what can we all do in the room? What can we do to sort of encourage that, and do you see that as a positive? I personally think it's a positive, but in a unanimous society-based country, there are a lot of challenges. So if you have any viewpoint on that, I would really appreciate it.
I have 2 quick points. First of all, I'm so glad you brought up the fact that pressure has come from the government. And as a Reaganite who is kind of anti-government, I have to change my focus and look and recognize that if you look at the most positive activism in Japan, it's really been driven by the GPIF and the Ito report and the PFA. And the analog to that in the U.S. just doesn't exist. And we were speaking last night with Bill Emmett about how the bureaucracy has consistently continued to internationalize its people. And there's 45 who are sitting in the University of Chicago with my daughter, and that I think is it's a strength of Japan that we just don't have in the U.S. because it's just a revolving door of former Goldman Sachs bankers who are making policies that benefit the finance industry. But I think, and it's so frustrating for impatient Americans like me to want to see this change, but I think it is happening. It has to happen. Just you look at the demographics, you look at how much more capable the average Japanese woman is than the average Japanese man in terms of language skills. And if you look at the investment policies that Japan has hitched its wagon to the U.S. for better or worse, that we see it in Nashville. There 1 million jobs, 50,000 jobs in Tennessee created by Japanese companies. The people to manage those at the board level are going to be women. They have to be, or they're going to be foreigners. I mean, the general counsel of Bridgestone lives around the corner from me. The number that you probably know, the head of Bridgestone America, is from Italy, and he's a senior guy on the board. There just aren't enough Japanese men to fill those spots, and I think it's going to happen, but it's very hard to force it. And I don't know. We need more people like you, I would say.
You, a quick comment?
I would agree with absolutely everything there, but it's interesting that the point that Thierry makes is a good one, which is that there is a perception outside Japan that capitalism, as practiced in the US, does need to move a little bit more in the direction that Japan has consistently been. And I think that was there's a very obvious moment, wasn't there, with BlackRock and sort of saying that. And I think the problem with that presents is not that either is wrong, but that to some extent Japan decides that it's done as much moving as it needs to do in the other direction, and that while it's true that the US should possibly move in the direction Japan has gone, we haven't finished the process that was begun with the governance code and with the stewardship code and with, as you say, the GPIF. And that the big risk is that Japanese corporate Japan decides, okay, well, we went this far, America's coming this way, there'll be a happy point in the middle. There's actually still a great deal of distance that Japan needs to move to get anywhere close to those standards. But that would be my observation.
Thank you very much. I want to finish with one anecdote. It was about 15 years ago or something like that. And look, somehow I'm a Japan optimist, right? So it's Japan optimist. And so I was invited by the Keidanren, right? And it was like one of these times when Japan was falling off a cliff and all of that stuff, and said, "Oh, we want to hear some optimistic story. Can you cheer us up, right?" And so I did whatever I do, right? That it's the greatest thing since sliced bread, right? Where they beat Germany in the World Cup, right? But one of my mentors, then took me aside and said, "Jesper, that was very nice, but you don't understand." I said, "Well, okay, obviously I don't understand. But what don't I understand?" He said, "We are craftsmen. We strive for perfection. We don't need to be told that we're good. We need to be told where we're bad at so we can fix it." And I think that attitude of Kaizen, right, is something that I think is very often understood. Japanese CEOs, when Patrick and I, when we visited companies, right, with JP Morgan, it was funny because, the CEOs were engineers. And when you ask them over a glass of wine and whiskey and sake, right, late in the evening, what do you actually run the company for? They just want to build the best car in the world. The finance is like, it's like kind of noise, right? Now, having that taken now holistically, because now there is an understanding, right? 10 years ago, a Japanese CEO didn't know what EPS was, right? What dividend payout was, right? Now they do actually know. And I think from that perspective, this generational change, and now I think the process towards true multi-stakeholder capitalism, right? I think, the chances for that are very good. And I hope that we can explore this, in further discussions here. Leo, Andrew, thank you so much. It's been a pleasure. It's been a joy. I know that we will take this further. Thank you very much. Thank you.